Tesla's trading reminds me of 2003. Hey everybody. So we have a ton to go over. Reminder, PPI is tomorrow. We're doing a live stream at 8:30. We usually do not do a live stream on Fridays, but we're going to do one for this because it's going to be very important. Biggest number before the Fed meeting next week, and of course quad witching, so we're going to cover it. As always, subscribe to the channel, click all notifications. I'm starting to put updates in charts in YouTube, and do me a favor and please click the like button. Tesla. We had some really negative news today on the fact that he may take margin loans against Tesla for Twitter instead of debt. It would be in his best interest to do this. So if he borrows against stock, right, he doesn't have those debt payments. So this is a really good thing for Elon to do. I'm not suggesting that it's going to happen, but I've seen companies do this before. They will pledge stock instead of debt because the debt payments. It's a way of doing that versus giving equity. And then he pays the interest on the margin loan, which will be nominal compared to a debt payment. It's a win-win for everybody until the stock goes down. And then it becomes a spiral because the people that have the margin loan start shorting the stock. So we should have sold down on this. Instead, I've got another little doji. So now I've got 3 down in a doji and I'm setting up here to possibly flip going in the PPI tomorrow. This reminds me a little bit of what used to happen to us in 2003. Now, obviously Tesla wasn't trading then, but let's talk about what do I mean? I mean, we would make these lows and then we would rally up and we'd be so convinced that clearly it's going to break and clearly it's going to go down. And then out of nowhere, it would stop. And then it would just stop on bad news. And that doesn't really make any sense, does it? So that's definitely a sign to me. I saw some other signs today that we're going to go over, but that was a sign to me to pay attention to this because this was something that I was actually short on. And despite what you think, I take losses just like everybody else. So this was something where I didn't really make a lot of money, took a really quick loss and got out of the way. It just did not do what it should have done today. So I really think it's very important to look at these and get an understanding of what's going on out there. Watch how this acts after PPI tomorrow. This is your key level to watch, 175.20. LULU had earnings tonight, and they are being perceived as negative. Now, from what I've seen, I'm okay with what I saw. And let's just review it. LULU sees fourth quarter revenue, 2.6 billion, 2.65 versus 2.65. So they are lowering guidance on fourth quarter. That's not overly surprising considering the circumstances right now. Now, go to the fiscal revenue, 794, 799 versus 796. So they're actually coming out, and if you look at this, they're actually raising a little bit on the fiscal 22. That's what you want to see. I understand this quarter is going to be bad, and I can see why this quarter would be bad for retail. So far, it hasn't been, but they beat, and they beat their expectations. So we shouldn't rule that out. Now, in the trading community, what we did was just read the information as it came out, and it really made very little sense to us. So we just utilized patterns, right? Pattern recognition can save you a lot of time and heartache. So here's your little range, right? And we know that this 1 minute range is something we should be watching because that's when the algorithms and high frequency traders act. So now you know where their max pain levels are, whether they are long or short. Once they're defined, you just put a little level in there because you're making lower low, lower low, lower low. Wait till you flip one, flips. Now, if this bar was not so emphatic, meaning the way it pushed up, if it didn't do that and it didn't push up like that, I wouldn't be as interested. If it was like a little milk toast bar, I wouldn't be so excited. But this gave me really good entry, 334, 332 stop, pushes by the time I got in with slippage, 336. And then what you're doing is you're scaling out into these spikes. And then you just kind of move your stop up and get out of the trade. Now, caveat, I still have a little bit of this on. I want to see how the conference call goes. I'm very interested to see how this trades after the conference call. Very telling that you're not rolling back down. You're starting to see these little dojis. And we know that wicks, even on these little dojis, wicks are price rejection. AVGO had earnings tonight. And after hours, it's blowing right through that 200-day moving average. Now, I'm curious how the conference call is going to go. And we're filming this at the end of the day, so the conference call is not right now. But see this? That's our level. See how we flipped out of our level even before the conference call? That's usually a fairly good sign. This is not retail that's pushing this up. Okay, it doesn't work that way. So this is actual algos and high frequency traders. Now, does it guarantee that you're going to keep rising? No, it does not. It does not guarantee anything. But I think it's very telling. Broadcom sees sales 8.9 versus 8.8. What other semiconductor stocks were going up today? 10.45 versus 10.28 on earnings. Sales 8.93 beat the 8.9 estimate. So we're raising revenue and we beat. Doesn't really sound like a recession. Now that leads us to an outliner. Today, everybody was watching this, and myself included. And this is what I mean by 2003. We're all expecting us to roll and not break the 200 on names like NVIDIA. But you can see these levels and you can see how they act, right? Higher low, higher low, higher low. We can have all the opinions that we want in the world about the big recessions coming and looming. And quite frankly, we can go up for a very long period of time and then come right back down. That absolutely can happen. I would suggest that we're still in the big inflation trade, and we'll get to that very shortly. But look how we're respecting these levels. As long as we're respecting the levels, we have to pay attention. Now we're in a position going into PPI where you're closing above everything else, going into PPI, right on the 200-day moving average. You need to watch NVIDIA tomorrow. You need to watch this trend line. You need to watch what's going on under the hood. Look at the 55-day, look at the 22-day, look at the cross. Okay, these are things that you want to watch. This is the closest we've been to the 200-day moving average since we broke. We've never been closer. And we're seeing this pattern everywhere. And I want to be really clear about this. There are no gurus. Nobody really knows what's going to happen. What we do is we look at past performance and then we try to make a decision on that. So if someone's out there telling you they know exactly what's going to happen, run, because they don't. Nobody does. But you look at what has happened in the past and what could possibly happen in the future if that replicates. That's the best we have. Now, if you look at something like this, you can see these pullbacks, pulled back down, pulled back up, back down. Okay, that's not rocket science to figure out that this stock is being bought. Okay? You don't really have to understand technical analysis to understand that something that's constantly dropping less and going higher is being accumulated, right? It just makes sense. Now I've got a golden cross on Netflix after the death cross. This is a signal. I went over this yesterday, and I would really watch this level and how we're playing here, because to me, this is setting up, and I think a lot of these names are setting up ahead of PPI. The light blue line is the dollar. The dark blue line is the S&P. The orange line is TLT, the 20-year bond market. Now, why is this important? They are still buying treasuries, even though the market is dropping. The dollar is still coming down, even though the market is dropping. So is it possible that we're just working off some kind of overbought condition? This is the S&P 50-day average percentage of stocks above. The orange line is the S&P. See our levels? This is when you were over approximately 90. That's what this level is, 90. This level is 85. I think it's really significant that it's only happened 4 times. The fact that this has only happened 4 times is significant. So what we would do is we would drill into that and say, can we gather any information from this? Well, the last time we were up here, we made lows. Well, how about this time? Well, we pulled back a little bit later, but we then kept going higher, even though the market kept going higher, even though stocks dropped and stocks below the 50-day moving average, even though the percentage of stocks above the 50 pulled back. Doesn't matter. You still had the underlying pinnings. Same situation here. You pulled back, but when you pulled back, it wasn't the end of the world. So you pulled back again here after working off the pandemic, and then what happened? You exploded to the upside. These are stocks above the 200-day moving average. Here's a higher high. Here's a lower high. Higher high, lower high. So Stocks above the 200-day moving average are actually higher than they were in August. What does that mean? It means that the breadth of the underlying market is stronger than the last time we were here, but equity prices are lower. If we look at the 10-year Treasury and we look at yield, and we look at where the yield was on August 16th, we were roughly 2.8 when we had that peak on the S&P. Right now, we're thinking there's a peak and we're at 3.5%. It's probably not likely that rates are going to come down, which they are predicted to come down in 23 and 24, which would make the 10-year drop. So it's probably not likely that the bond market is going to drop, meaning they're going to buy bonds. So it's not surprising to think that the bond market is going to be bought. We are seeing a higher yield now than we were in August. TLT is a name that we bought in the trading community. This was the way we have the trade set up. This was the alert, 101.60, targets 115. Obviously, everyone has to trade the way they want to trade, but I like the trade. I think it made a lot of sense. Here you are at that 115 level, and you can see pretty clearly what's going on here. I think you can get up to this level, and I think you can push. But does this look even remotely close to where you were in August 16th? Anywhere near that? So you have a lot of what I would view as disparities for the assumption that we're just going to roll over. Does that mean that we are definitely going to go up? No, it means anything but that. But it does mean that we're at a key inflection point. Those white arrows signify economic data events. It doesn't matter technically what we see on a chart. What matters is the actual number. Right now, we are very data driven. You can see what happened with a good GDP, CPI, CPI, CPI. So when you're starting to see these, the Jackson Hole speech, so you can see these dates, it's significant how we respond tomorrow to that data. So I hope you found this helpful. If you are interested in the trading community, it is currently on waitlist. There's a link in the top right. Simply click the link and it will take you to the wait list. Join the wait list, and when a slot opens up, you will be invited to join. Everybody, have a great evening. Hope to see you tomorrow at 8:30. Trade to win.